Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you, as always, for making time today.
Good afternoon.
Well, the U.S. market was closed on Monday for Labor Day. The futures there are higher right now, though. Looking at Europe, stocks were mostly lower, with Germany's DAX leading the decline, down almost 2.25%. What's the story in the global markets?
Yes, the main reason for the European market to go down is because of the Gazprom reverse its plan to resume flows through the Nord Stream pipeline, shut it indefinitely, causing the uncertainty about the energy costs for European economies. The benchmark Stoxx 600 went down by over 0.5%. As you said, the DAX 30 is down by more than 2%. The France CAC 40 is down by 1.2% plus. Everybody is focusing on what might be happening to the energy prices, as well as what ECB's decision in terms of the monetary policies. And many analysts are pointing to a 75 basis point rate hike in September, as the U.S. is expected to do the same. That's the whole reason why the currency continues to depreciate versus the U.S. dollars, and therefore the market seems to be quite volatile. But if you look at the U.S. futures market, it is up quite a bit after a continuation of 3 days of falling, continuously uncertain about the moderating the job growth rate, whether the inflation pressure will be coming down from U.S. Uncertainty continues to remain as the job growth rate remains to be quite strong. However, if you look at the jobless rate, unemployment ratio has gone up to 3.5% to 3.7%. As the Fed trying to tighten the monetary policy, it is allowing the economies to slow down in a right pace. So therefore, market seems to be taking it as the money supply slowing down is affecting positively to the economic slowdown, and therefore inflationary pressures to come down. If that's the case, we will see Fed stance on the rate hike will gradually change. That will trigger market to go up in the future. But for the timing, still uncertainty remains quite high because we're waiting for the inflation number for August as of the 13th of September. So we'll wait, and we have to wait and see how this thing plays out.
Some uncertainty here in Korea, too, it would seem. Stocks were up and down during the session today. In the end, a moderate gain for the KOSPI, holding above the 2,400-point mark. Among the biggest names, it was a real mix. And on the tech-heavy KOSDAQ, a gain of about 1%. Tell us about the domestic market.
Yes, if you look at the KOSPI, it closed by going up by 0.26% at 2,410. KOSDAQ is at 779.46, up by 1%. This rise is after quite significant decline in the past several days. Clearly, there's uncertainty remains to be very high as the KOSPI remains to be at 2,400 territories, which is very cheap valuation in terms of price to book at 0.8 times. The market has risen on back of some of the technical rebound. Electronic sector is up by 3%. Leisure equipment was up by 2.9%. Telecom equipment was also up by about 2.6%. And the theme-based plays were up as well. In any case, the foreign investors are just playing the market. They're not really buying aggressively or selling. They're just buying and selling the futures market to trade this market on back of uncertainty in terms of currencies. If you look at the Korean currency, it has hit the 1370 territories, which is record high level that we haven't seen in a very long period of time. BOK is continuing to say that the fundamentals of Korean economy is reasonably okay. That the raising interest rate to 2.25% is something that is acceptable, and they will continue to raise interest rate as long as U.S. continues to raise interest rate. If you look at a lot of the numbers are coming out for current account surpluses and trade deficits, and the reserve ratios, and all in all, it seems that the Korean economy is reasonably doing well relative to other economies. But nevertheless, uncertainty remains quite high as currency continues to depreciate. We think that we need to make some kind of currency swap with the U.S. in order to stabilize the currency, given the fact that Korea's debt ratio is not that high in terms of the government bond rate, government bond debt to GDP ratios, all that means is that the policies, regulatory environment, government needs to do more work in order to stabilize the currency. If the currency stabilizes, then economy will look much better in terms of the trade deficit numbers as well as the overall economic uncertainties or the inflation numbers. Inflation numbers still remains to be very high at 5.7% year on year, but if the currency stabilizes, then that number can come down as the oil price has declined quite sharply recently. So we'll watch and see how the currency plays out in the future.
Well, speaking of oil prices, the members of OPEC Plus have announced a cut to production, and actually the Brent futures are down, though, because the cut is apparently not seen as having a significant impact. What's going on with oil prices?
Yes, the WTI crude futures slipped towards about $88 per barrel on Tuesday after gaining quite a bit of 2% as the OPEC Plus have decided to do some actions where they're cutting the output by 100,000 barrels per day from October. But that's really remains to be quite small as it's about 0.1% of the global demand. So therefore, it's not really impacting that much. As you know, there's a potential supply boost coming from Iran nuclear deal. If that happens, the supply and demand picture would be in favor of oil price going down further. And we think that the oil price should stabilize at somewhere around $75 to $85 per barrel in a longer-term basis. At least in the short term, however, though, as these kind of production cuts announced and uncertainty remains in terms of the Russia-Ukraine war, we think that the volatility could remain. But nevertheless, we're not going to see $100 per barrel oil prices in the future, but rather we'll see more stable oil price in the future.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for coming on the program. We appreciate your insights.
Thank you very much.